And there it is. The markets are officially closed on this Wednesday, December 3rd. Welcome, investors and traders. I hope you had a good holiday weekend last week with Thanksgiving. Hope you enjoyed that time off with your families. We certainly did. And then coming right into this week, today and yesterday especially, we saw a nice rally in the market. And we're going to have a lot to talk about, especially with the gold, silver, and some of the other positions that we've been trading. Before we get into that, let me bring on Nod from our Nod Live news feed. Some of you are familiar with that because you're subscribers. If you're not, you may want to check out that scan code right there in hopes that you could check it out, at least for the 15-day trial. It's the news that comes through that feed is absolutely incredible. And Nod has been very quick to the trigger to get the news out even before Bloomberg posted on their page. So Nod, welcome. Thank you very much. And why don't you do a data dump on us right now, and then we could look at the charts and maybe take some of the questions that are already coming in on the chat. Go right ahead.
Yeah, AJ, thank you so much, and good afternoon, everyone. Thank you so much for joining us. We do appreciate you taking out time out of your busy life to be here. Listen, it's time for my headline du jour, and I'm going to look at my screen because there's a lot. But Michael Burry, we talked about him a couple weeks ago. He said he's expecting a prolonged market sell-off that's going to be wider and deeper and worse than the year 2000. So more of that to come in the next couple of days. Oracle had their 5-year credit default swap close at their highest level since 2009. That's one we've been covering. That's one AJ's been on top of, and we'll continue to seek more information on, but keep your eye on that. U.S. private employment is falling at a recessionary pace, and it's on its worst streak since 2020. Treasury Secretary Besson says that there are certain sectors of the economy that have weakened and that we certainly need a rate cut. AJ, you and I will talk on that later. November ISM surged to prices that have been, fell to prices at a 7-month low, which shows sign of a weaker economy. Copper hit a fresh high, and retail traders have been buying leveraged stocks and ETFs double the average that they have over the last 5 years, topping 2021's peak. So that's a big word salad, but hopefully that gave you a little bit of a picture. But speaking of a little bit of a word salad, AJ, we've covered gold quite a bit, but I wanted to give everyone a little bit of bar trivia. I'm going to pull up this chart for everybody. Did you know that over the last 30 years, gold has outperformed the S&P? And AJ, there's a lot of ways we can take this and with this chart, but sticking to gold just for now, please. I know we're going to talk about another metal in a little bit, but we're in a rate cutting cycle, which historically means that it weakens the dollar and strengthens gold. So please let me know your thoughts on gold and the U.S. dollar, which ironically, AJ, is down for 9 straight days as we're heading into an inevitable rate cut. And any preferred instrument, maybe the AG trade. We talked about that and sent that out to our members. And Mike gave us a great question. He's using the new 7-point trading checklist on AG. AJ, it's saying 7 bearish categories. So we bought the puts. What do you think?
Well, let's take a look at gold first, and I'm going to back out on my chart. Look at the monthly chart. Now that looks pretty vertical to me. And while I am bullish on gold for the longer term, I'm putting another 20 to 25% price increase on here over the next 6 months. But, and here's the big but, I think gold's going to pull back in a pretty dramatic way before it gets up to the higher levels over 5,000. And a lot of that is driven by the technicals. And I could also say that with silver and some of the silver miners, I'm expecting a pullback as well, which for those who are silver stackers, silver investors, silver mining stock investors, I think the market's going to give you an opportunity to get in at a cheaper price. Now, with that said, I don't believe we're going to see a collapse in this area of precious metals and mining. I just think we're going to see a pullback because you look at gold here. Now, this is going back to the beginning of the year. If you take a look at my lines that I'm drawing here, right down at the bottom here is the beginning of this year. We're coming into the beginning of 2026. So you can obviously see that gold is up significantly from for the beginning of the year, from 2,400 up to 44. I think it'll top out over 4,400. And so you got the folks that got in at the beginning of the year, and they're looking and they're going, man, I want to take some profits, but I don't want to pay the tax on that right away. So I think you could see at the beginning, maybe even the first week of the new year, I think you're going to see some profit taking to more or less defer the capital gains on these positions. And that's when I think you'll get a short-term sell-off. So I think after that occurs, if you're, again, still interested in the metals and mining companies, I would be very patient, loaded with cash at that point in time. And then maybe to the middle of January, maybe even the end of January, I'd be a pretty aggressive buyer at that point. You know, looking at some of the mining companies, look at First Majestic. What was the question, Nod, on this one?
Yeah, so Mike, he's using the new 7-point algorithm on AG, and it was bearish in all 7 categories. So he bought the January 15 puts.
I like that idea. And to support that, let me just show everyone. This is the debut, I guess you could say, from the positions that we have in the 7-point algorithm. We have our members are now enrolling in this. So if I put AG right here, and I run it through the algorithm, it's only going to take a couple of seconds here. You're going to see it's going to give you the chart, the signals. But here's, I believe, what Mike is talking about. You've got all of these stacked up on the sell side right here. I mean, every bit of those check marks are on the sell side. And you're not just seeing that in AG and First Majestic. You're seeing that in PSLV, SLV. If I put those ticker symbols in, you're going to see the same exact thing, because the technicals are telling us that it's overbought. And especially after today, if you look at AG, that's very close to a shooting star on lower volume. So it's the drop in volume on the way up that gives us that signal that the buyers are weakening. Now, as a result of those technical signals, I can tell you what I've done. I can't tell you what you should do,
right?
But I can tell you what I've done. I sold out 2 days ago. I sold out of 20% of my remaining SLV to eventually look for a pullback in PSLV. I know this might sound confusing, but I'm basically legging into a PSLV position. So I sold out of my SLV, and I'm looking for these gaps down here on PSLV to fill. So with the cash that I had sitting there from the sale of SLV, while I'm waiting for PSLV to sell off, what I did is I bought XRPI, which is actually a publication that went out to our members. So I bought that right on this low right here on this day, which was Monday. Okay. And what's happened since? Well, XRP has gone up, and it's gone up in the shares that I bought with the cash that was generated from SLV. I know it sounds confusing, but I'm actually making more on the XRPI than what I would have made had I stayed in to SLV. So what I'm going to do is I'm going to eventually sell this XRPI to take the profit. And then it's kind of like a 3-legged trade. But then what I'll do is I'll take the profits from all that and the cash, and hopefully PSLV will pull back to that point. And I'll actually wind up with more shares in PSLV than when I first started. So I'm getting out of SLV because it's considered paper silver. PSLV is backed by actual silver held by the Royal Canadian Mint, and it's all documented. So I feel a lot safer when we eventually get that ultimate short squeeze. I want to be all in on PSLV and not so much in SLV. So that's a long story to a very short question.
I appreciate it. And you couldn't resist dipping into silver. So let me just pull up this silver screen here. Now, I'm old enough to remember when we were talking about 50, and now we're almost talking about 60, AJ. But check this out. Silver is on track for its 8th consecutive green month, the longest such streak since 1980. And I know you and Greg were trading silver back then in the pits. But here's the difference. There's industrial demand and a safe haven asset demand, which is in combination, which is kind of a fuel for it. So I want to see you to talk about what you've done. But PAAS has been one that our members have traded. Do you still see an opportunity tied to silver in PAAS? Because this is a nice liquid.
Yeah, it's going to be the same story as what we just told about First Majestic. You got Pan American here, very popular. It's up there. I mean, I would say the major mining companies that we've been trading are Pan American, First Majestic, Barrick, and FCX as well. Which if you look here, Freeport McMoran. Now I had an upside target on this one way back here. I don't know if you could see that diagonal line at 44.5. That was set back in the first week of October. Now these diagonal lines here are from our rapid fire session that we do every Wednesday. And you could see that the majority of the targets that I've set over this one over time have hit. Now, as of today, that target of 44.5 has officially hit as we close at 44.53. Now, what would you expect to see on this one? I'll put a forecast out on there for the record. Maybe someone will bring it up later on the rapid fire.
For sure.
But I think at the very least, this could pull back to 43.30. So what are you talking? Maybe 2.5% downturn on that to fill the gap. And then you might actually see a role reversal pivot from here as the stock not only fills the gap, that gap fill is going to act as support. And I think you could see a bounce and then maybe all the way up to the 47 level up here, resistance back from the June and July. So I like to trade the miners. I'm not so much a buy and hold in the miners, but they follow the technical signals like a charm. I mentioned Barrick. Look at Barrick. Look at the diagonal lines here. You see, now this one did not hit, but if you go back and look at some of the targets that we've hit over time, this is before they changed the ticker. This is after they changed the ticker. So they all my targets aren't showing here, but you could see recent upside targets hit pretty quickly. Now this one I think is also one that could pull back, but you're going to see that happening throughout the sector. Now for the option traders, right? Let's go back to AG, and I want to thank Mike for bringing this up as a topic. Mike said he bought some puts. Now, what would I have done, Mike? If you could tell me what expiration and maybe even strike price in the chat there. Tell us what strike you bought. I'm not going to look. I'm going to tell you what I would have done to take the put position. I would have bought the April 13 puts for around $1.35.
He bought the January 15s.
This January?
Yes.
Yeah, I would not have bought that one. Not that you're not going to. Not that I think you can't make money, but look at the theta on the ones I picked. On the 13s for April, you're only getting 1 cent theta, meaning that option will decay 1 cent per day. Okay, if you go to the Januaries and look at the 15s, look at that. Your theta is twice as much as mine. You're decaying 2 cents a day. And you're talking about pretty close to being the same price. So I like going further out in time to give you the opportunity to stick with the trade, because, if this thing does pull back, obviously you'll make money, but there's a gap down here. Let me zoom in a little bit more. For those who are gap traders, there's a gap right down there that I think that one could fill. So you could get this going from right around 16 down to 14 pretty quickly. But at that gap fill, there's another opportunity to get in on a new long position and buy it at that gap fill. So there are a lot of opportunities here, especially if you're following the 7-point trading algorithm, which is just released this week. So I'm happy about that. And again, thank you, Mike, for the questions. That's really helpful. Appreciate it.
That was great. So hear me out. I'm going to look at this wild chart. AJ, I got creative. I'm trying to keep things fresh. So 1 Bitcoin can now buy about 1,400 ounces of silver, which is the least since October of 23. This comes as the Bitcoin to silver ratio plunged 60% in that big move. So since August, that ratio is more than half. To put this into perspective, the ratio went from 69 in the 2022 bear market down to 2,250. So down to 700 ounces. So AJ, with all that said, Bitcoin being a risk on asset and silver being a risk off asset. I want to focus more on the Bitcoin area. Can you look at MSTR? And since you spoke about XRPI, maybe just look at XRP because that's more of a liquid name as well.
Yeah. Now you mentioned Michael Burry being extremely bearish on the general markets. Well, he has a short position. I understand he's trying to put as much pressure as he can through his audience. However, when you look at Michael Saylor, I think Michael Saylor is as bullish on MicroStrategy or Strategy Inc. now as Michael Burry is bearish on the general markets. I mean, I don't know what Michael Saylor is smoking. Actually, I'm serious. He did a broadcast late last week talking about how he believes gold is going to get punished so badly that MicroStrategy is going to be lifted and Bitcoin and that whole industry is going to be lifted to levels that will bring his company up to, believe it or not, he actually said this number, $100 trillion asset. He said that. Look it up. Go. What's the X AI? Grok. Go Grok it. Go ask Grok what Michael Saylor said about his $100 trillion claim. $100 trillion. I mean, where did he come up with that number? And again, I don't know who he's hanging out with, but man, he's got to stop smoking that stuff because that's getting people in. Here's what happens. It's going to get those who are gullible enough to believe that, going to get them ultra long. And at the same time, it's blowing up whatever credibility he has in this space right now. I mean, no one who's serious about the market is going to even consider his opinion any longer. Now, with that said, we took a profit on the MSTR position that we had, and we did okay with that. And but I do believe that if you're looking for a long, I think you could see a little bit of a bounce. Now, I do have an upside target on this one at $250, and it sounds like, oh, that's a long stretch up there, but it's really not. It was a $62 upside on that. This stock can move like we've seen in the past back here. If this thing bounces back here, it went from 270 all the way up to 420 in a matter of 2 weeks. It has the potential to do that. Now, you mentioned XRP. Is that a /? I don't pull it up on this because I leave it. Yeah, this is the XRP. Now, there's not enough history for me to analyze this on this particular chart. But I like to know what CJ and Matt. I like to know what CJ and Matt are doing right now, talking about what on the Cryptex team here, because this is their space. I'm trading the Bitcoin related stocks, not so much the crypto stocks, but I would feel more comfortable putting a spread position on MSTR than going outright long it at this level for sure.
Okay. Yeah, and I was on their webinar last night, and they did say that the way that these instruments are tied to the cryptocurrencies, you can get decent exposure. So that supports what you said. So that's great. And again, they have a great room going. I'm really happy they're on our team. So you mentioned serious markets, AJ. This is what caught me off guard. This latest chart. So TLT, we're staring another rate cut in the face, and we better get it because equities have certainly priced it in. But the short interest in TLT is now at an all-time high, which coincides, AJ, with U.S. investors having the smallest allocation to bonds since the run-up to the global financial crisis. So can you let me know what your thoughts are on the 10-year as well as the TLT, especially because that's one that you have been very active and successful in, knowing that we have a pretty much lock on a rate cut that's coming?
Well, we have a long members, I should say, have a long position in TLT. And I still think this is a great entry point for those looking for something new to trade. Now, TLT, let me just, for those who aren't really familiar with this instrument here, this is basically tracking the 20-year Treasury bond. And so when the Treasuries go up, this will go up. Well, what causes the Treasury market to rally? Lower interest rates. And we're expecting that to come out from the Fed any day or possibly any week now, right? So I do believe that once they make the announcement, you're going to see a rally in TLT. And then I think it could top out somewhere up here around the 62 level. That's 92 level. And so this is one that I would not be a buy and hold type of an investor. I'd be more of a buy and protect trader. Now, for those who are short it, you have to understand something. When you are holding this on the long side, it's paying you more or less what the interest is, or the yield is, 4.32%. You saw, if you could see that here with my cursor, 4.32%. So for those who are short it and hold it maybe too long, they're suffering what an option trader realizes as time decay moving against them. So
Right.
they're responsible for the dividend payout. Those who are short selling. So I mean, I certainly wouldn't be short this one. I'd be more of a buyer. And for the option traders, they got a great selection of options. I would go out maybe if you're starting a new position again, maybe to April. Looking at those $93 calls look pretty attractive out there, and you can make some money on that. Yeah, here's another one. By the way, this is another one that's done a really good job hitting targets. We've been tracking for a while. Here's a target that's hit. Here's another target hit pretty quickly. This target took a little while to hit. Here's a target to the upside down here that hit. Then we did another upside target, then a two-parter target, which hit. So looking at this for the year, we've had 100% target hit rate on that, which I don't know how many people are putting forecasts on TLT, but I'd say that's a pretty strong track record for target hits. 100, you can't beat 100%.
No, I don't mean to put you on the spot here, but AJ, you're a very disciplined trader, and that's why you've been able to do this for so long. But does the idea of knowing that there's this much of a short position in something, be it TLT or anything else, does that come into play when you have exposure to something?
No, not if I'm long it. I mean, you want the short interest to be super high when you're long it. I'm not going to be shorting this at all. I don't recommend anyone do that. So that doesn't bother me at all, because even if I don't know what it would take for TLT to be a short squeeze, because it's more or less referencing or tagged to the bond market.
Correct.
You're not going to see a short squeeze in bonds. That's not happening. So I don't think there's any risk of that happening. That's why all the more reason, though, to be long it, because those who are short it, whenever it gets down to a support level, they're probably going to start taking their profits through short covering, and then you get the rallies after that. So I like it quite a bit at these levels, especially. Do we have any questions coming in on the chat, Anthony?
We do. We've got a bunch of ticker requests, and for those that are new to our broadcast, our members are going to join us at 6 p.m. Eastern. They're going to join a little bit early. They're going to submit their ticker requests, and then AJ is going to field and forecast that for them. So let's do a little bit of that now, if you don't mind, AJ. Tafe, who's a loyal person who attends all of our sessions, would love Carvana, CVNA, please.
Well, this one obviously had a beautiful rally right after my downside target hit. I mean, how beautiful does it get than that? I mean, look at that. Hits the downside target to the penny.
Right.
And then right after it hits the target, it rallies. Now, I didn't call for the rally. I just called for the downside target to hit, which it did. Now, let's do this. Now, I don't see the drop in volume yet, and I don't see any bearish candle, but there are some bearish signals that are popping up. So let's do this. Let's take the 7-point trading algo here, and let's put CVNA in here and see how this works out. Now, for those who are brand new to this, you don't have to be a StickyTrade member to take advantage of this algorithm here. It's web-based, so you could just sign up as a member. But look at that. Well, remember, we don't have the candle yet, but we get any kind of a pivot here, you're going to have all of this red all the way down. So as soon as that pivot takes place, you're going to have 7 out of 7 bearish signals being triggered. So I don't want to jump the gun on that one and just go short. However, there are enough red bearish signals to be able to possibly start a short position, or maybe start scaling into some puts. What would I do, or how would I trade this? I like April right now. I like it a lot. I would go down pretty far and look at the 290 puts for around $19. And I would put maybe a $5 risk per share on that, or some might call it a $5 stop on that. And I think that this stock could actually pull all the way back to that moving average, which would be a pretty dramatic pullback, because it's done that before. See these down legs here? Notice how the angles are almost identical, almost like a 45-degree angle. This one here was a little bit more extreme, but the angle is pretty much the same. And it's got long legs, right? That's the term. Long legs, meaning the down leg, when it does finally turn, is like a mini downtrend within the bigger trend. And it gives you a lot of movement in there for option traders. Now, another way I would trade this is I would sell in the money call spreads, vertical call spreads, and look to buy those back when the stock drops. And that's probably the safest way to go as an option trader. I would go out to maybe February, March, sell some in the money call spreads, and then wait for the pullback. But I tell you what, I'm going to go out on a limb here as well, and I'm going to put a downside target on this one for the viewers here. Let me just put my little drawing tool up. So I think, again, I think the first stage is going to be a pullback to this roll reversal right here. You see this right there? That's going to be my pullback point, because remember, the first resistance point here was broken here, and then it will most likely act as support right there. So if you're looking for a pullback or a target point, I would put I'm going to round that to 373 even, and we'll keep that on the record and maybe check that next week to see how that works out. But I think
we're on the record for sure. It's out.
I mean, this is what we do. Now, you know, you and I talk every single day, and our members have exposure to this. It's not uncommon for me to put my neck out.
No,
and
you do it all the time
on that. And I think, you know, I think it's refreshing, actually, that at least someone is doing it, whether it be me or any one of our coaches, because no one is going to do it on the short term. You got Tom Lee, and I give him all credit for putting incredible upside targets on the general market, but that doesn't really help the option trader who's looking to put on a trade for 2 or 3 weeks. Right.
To trade volatility, it doesn't help.
Yeah. Tom Lee is catering more to the investors, not necessarily the swing traders, and particularly not the option traders. That's what we do here. You know, you can make a lot of money on CVNA if it pulls back to 373. You're talking what, $22 to the downside. You could do very well on that one if you know how to follow the charts and manage risk.
Oh, and versus being outright long the equity versus having exposure on the option side, the percentage move is it's threefold. So
well, look how much money you have to put up trading this one on the equity side. I mean, you got to have $1 million account to be trading any kind of decent shares. But for the option trader, you could trade with a fairly small account, and if you can't even afford to put at $2,000, then go and put a spread on that'll cost you a fraction of that. And learn how to do it. I mean, that's what we do here. We train people and educate people on how to read the charts and how to, you know, more or less take the trades off the table and take profits as well. Now we're down to a minute and a half, so I'll keep the next question short.
It's flying. So can we cover ODFL from Mike, please? I know this is
ODFL. All right, ODFL. This one looks like a breakout here. See this one? This is a breakout over a resistance high. This one has some more upside to it. But this looks like an earning. Is this earnings come out? I didn't check on that one, but this looks like good news on earnings possibly. I think this one is short-lived to the upside. I think you might get a shot at it testing up here around 154, excuse me. I'm going to change that to 154, and that's where you're going to have some heavy resistance. So if you're long that one, what are the charts telling you? Well, number one, you got the breakout, so you got to trail your stop up. If you don't know how to do that, go to our Technical Tuesday playlist. And the video that went out yesterday was about trailing your stop. So if you're long this one and you had your stop down here, you're now moving that stop up to just below the breakout point, which is now going to be support. Now, as the stock goes higher, you got to keep an eye on the volume, because as soon as you get a volume drop, that's telling us the buyers are running out of momentum, and it's most likely going to pull back. So as soon as you see the volume drop, you're now moving your stop up to a low just beneath the previous low on the candle, and then you're going to help lock in your profits at that particular point in time. So that is it. We didn't run out of ticker symbols, and we're gonna pick up on that at 6 o'clock, going right to 7, and we're gonna look at least 50 stocks in that 60-minute period of time. And you all welcome to join us. Of course, just click on the link or go to the description page, and we'll give you a link to get to the rapid fire that starts every Wednesday at 6 o'clock. So that is it from me. Thank you so much for joining us. Thank you, Nod, for your info from the Nod live feed, and we'll talk to you next time.
Thanks a lot.